Hello and welcome to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. For the week ended March 20th, 2013, the long-term mutual funds industry saw inflows of about $7.5 billion. Now, leading headlines this week was news from Cyprus, of all places, a tiny little island nation in the Mediterranean and an offshore tax haven for Russian investors, was causing uproars in the markets as their banking system was on the verge of collapse. So this had a lot of hands being wrung as possibly a return to the European zone issues that we faced recently in Greece. We're about to return. So far, it seems like things might be getting under control as we near the end of this week. Certainly next week when the banks reopen or are scheduled to reopen, we'll see if anything changes. With that, let's look at our macro groups and see where the major activity was this week. Leading the charge, equity funds took in about $3.4 billion. Again, we're only looking at mutual funds here. Taxable fixed income funds took in $4.3 billion, while municipal debt funds had outflows, $240 million or so. And finally, money market funds had outflows of $25.5 billion. As I said, this was a pretty good week for equity funds. Apologies from Lipper on the immediate press release we had. We actually described it a little bit differently. The updated numbers do reflect inflows this week. $3.5 billion or so is what we're standing by. We saw the activity spread pretty well across the spectrum. It was a mild week for performance this week, easy for me to say. The 4-week moving average on equity inflows is now over $3 billion once again. Not too many categories had any outflows. Where they existed, they were very light, so it was not as if we had some offsetting outflows this week. Overall, we saw domestic equity funds take in about $1.6 billion. Non-domestic saw inflows about $1.9 billion. So for your equity mutual fund investor, the situation in Cyprus didn't seem to change too much, though they slightly preferred international to domestic. The two numbers are close enough to call it a draw. Overall, we saw some activity elsewhere that was rather interesting. We saw international products, like I said, with a little more favorites. Emerging market funds leading the charge among all classifications. They took in over $863 million. Products from Oakmark, GMO, and Principal were also in favor among equity mutual fund buyers. The next group to take a look at is equity ETFs. Here, a completely different picture. This time we saw outflows of about $1.6 billion total. Most of the outflows coming from some interesting emerging market and higher volatility products out there. EEM, SPY, IWM all indicate that investors were just getting rid of equities in general, whether that's emerging markets, U.S. broad equity, or U.S. small caps. There were some inflows into large cap growth areas. So for whatever reason, maybe just some interesting technical trades going on, investors got rid of some of their broader and more favorable holdings in search of pockets of good performance in large cap growth. Let's turn our attention to the taxable bond fund side. Here again, $4.3 billion this week. This was a big rebound from last week. Loan funds continue on their merry ways. They took in $1.4 billion this week. That's their best ever. They are on a roll. I don't see this party coming to an end anytime soon. Year to date, these funds have taken in over $14 billion. While that's not quite the same pace that high yield funds took in at the start of last year, recall that high yield funds have a much higher asset base. They're about $280 billion right now. Loan funds just over $33 billion. So this pace that they have right now is indeed very impressive. Overall, we saw products from Eaton Vance, double line total return, still continues to rake in money, hand over fist, week after week. Overall, that's where the activity was among the various funds themselves. The taxable ETF side of things was a little different. Unlike mutual funds and ETFs on the equity side that took very different positions, bond ETFs took in about $900 million. This was a good week for them. They continued to follow this similar pattern established by mutual fund investors. Although this week, instead of improving upon last week's, they have improved upon last week's, but 2 out of the past 4 weeks, they've had outflows. So overall, things are a little bit more lumpy as far as a flows pattern in the bond fund ETF side of things. We've seen short duration products this week more in favor than long duration products. So that's probably why there's a bit more of a disconnect in their favor. The next group to take a look at is municipal debt funds. They also had outflows again this week, $240 million. Not as bad as last week's with 300 plus. They're certainly under some pressure on the performance side. Again, not too bad this week. Last week, they kind of got whacked for about 43 basis points. There's a lot of hand-wringing going on the muni debt side of things. Certainly, every time someone talks about a sequester or balancing the budget, the tax-exempt status of munis comes up. There's also concerns about the pension fund liabilities for many states. We're currently in a low interest rate environment. What do those long-term projections look like if interest rates creep up? They don't look very good for a number of states, Illinois being the worst. But certainly those issues are the sorts of things that have gotten muni investors a little bit concerned. We have not seen strong outflows. We've just seen mild ones to this point. But keep an eye on this group. As things start to heat up in Washington, we may see some stronger outflows for this group. The final group to look at is money market funds. Again, about $25.5 billion in outflows this week. We're attributing a significant portion of that to the quarterly sales tax payments due from corporations. We saw institutionals withdraw over $27 billion this week. So we would tend to assume that that's where they're going. Retail investors, on the other hand, allocated just over $1 billion to their money market funds. So very different groups with very different approaches to handling their cash accounts. Well, that'll do it for this week. Please join us next week at www.lipperusfundflows.com with some more up-to-date information, or join us here again for another video. Thanks for watching.